Welcome. You've just tuned in for the newest episode of Rice TVX. I'm your host, Rice. Today I am joined by returning guest Lynette Zang. I'm going to include links down below in the video description and the pinned comment for the playlist that I created with all of her previous appearances. Lynette is the second person that I ever interviewed on the channel back when I started in 2018. I believe she is the one guest that I've interviewed more than any other guest on the channel, and she is a channel favorite. If you're unfamiliar, Lynette Zang is an economist that has been involved in the markets on some level since 1964, whether as a student, a banker, a stockbroker, and now a precious metals and currency analyst. She is here today to share her wisdom. All right, ladies and gentlemen, joining me on today's show is not only a returning guest, but also the most frequented person that I've ever interviewed. She is the second person that I interviewed on the channel. I'm not going to go into how many times. I will have a link down below in the video description and in the pinned comment for the playlist that I created with all of her previous appearances. The first time she came on was April 3rd, 2018. That was my second interview ever. And that was 3 months after starting my channel. The last time she was on was about 7 months ago, early February. And here we are today, recording this on the 3rd of September of 2025. Just a couple of things I wanted to highlight that we could possibly go into with discussion, Lynette. Gold and silver hitting all-time highs, silver 14-year high, gold over 35.80, silver over 41. This is per ounce. The Trump versus Fed wanting a weaker U.S. dollar, interest rates, repo market, U.S. debt, treasuries, Genius Act, stable coins, U.S. dollar supremacy, countries selling off U.S. debt and creating new demand, Bitcoin and crypto. So welcome back to the show, Lynette Zang. How are you doing today?
Of course, you know, you're one of my favorite people, so I'm very happy to be here and I'm doing great.
We would have like an extra 10 minutes for this interview had it not been for technical difficulties on my end. So I want to apologize to everybody in advance. That's why I just said we'll go ahead and just get right into it. So what do you think about gold and silver hitting all-time highs today, the day we're recording this?
I actually think that it's still really below fundamental value, and it's not really gold and silver hitting those levels. It's those spot contracts that are being traded that are hitting those levels, and even at the highs, they're not even near the true fundamental value or where they will go. And there's no doubt about that, because you know, I can't give you a lot of guarantees, but I can absolutely guarantee that at some point, all assets and all instruments end up at their true fundamental value.
Yes, and also, I mean, it's well, two quick questions. When you talk about spot contracts regarding gold and silver and precious metals, are you talking about ETFs, or does that include other things?
Well, the ETFs are just designed to mimic the spot gold and the spot silver market. So I'm actually talking about those spot contracts that most everybody thinks of as gold and silver, because that is what they want you to think of. But honestly, Chris, do you think that Wall Street gives you any true price discovery in these markets today?
No.
No,
and there's a lot of manipulation being done in the markets regarding like how they define certain things, like when we talk about a recession and changing the definition of a recession. But also when we see an all-time high or a higher price in gold, more specifically, it's an indication of a failing currency, more specifically a fiat currency, going back to that intrinsic value that you mentioned, which is absolutely nothing.
Right. I mean, there are over 4,800 currencies. These are just a few examples of currencies that do not exist anymore, because these are all government-backed and debt-backed currencies. And it's significant to realize what's actually happening, because we're living through it again, and the whole monetary system has been changed, and people have no idea.
and it's changing kind of right before our eyes with everything kind of going on with the stable coins. But I don't want to get too ahead of myself. Since we're talking about gold and silver, there's been a lot of mentions about a revaluation of price of gold. If we see a revaluation, what does that mean, and what can people expect from seeing something like that take place?
Well, you can see it go from its manipulated level to an overnight much higher level. And really, that's why understanding the fundamental value of any instrument or asset is so critically important, because how many times can you be lied to and you do not know the truth? That is Wall Street's job, to lie to you, to keep you in the system, to nudge you in the direction that those that are in power want you to go in. But it's all a lie. And I can tell you for an absolute fact, well, how do you know what the fundamental value of gold, physical gold is? Well, this is how they create money from debt, and it costs virtually nothing to do that. So this is fiat money, and this is sound money. Sound money that is money that cannot be inflated away by governments or central banks. So it is critical, but they're both money. They're just the flip side. How is this created? By creating debt. And into the future, and I know I don't want to get too ahead of it, but with stable coins and my question on how they would justify that creation, it is a combination of purchases and debt. And we can get into that in more detail in a little bit. But if you want to know what the true value of this is, because remember, it was this itty bitty 20th of an ounce. You can barely see it. You see how tiny that is? This is this is a 20th of an ounce, right? This backed $1 full until 1913, 1914, when the Fed was installed. Then it backed $2.40. And then by the time Nixon took over and took us off the gold standard in 1971, that's when we went into that pure debt-based fiat system. And when you're talking about a revaluation, the official U.S. price of gold is $42.22, which is why this new ounce of bullion, this Eagle, has a $50 face value. You can't buy it for $50, but it's based upon the official price of $42.22. And so when you're talking, there are a few things about a revaluation. Yes, it's going to be revalued. I don't think they're going to do it before they are forced to do it. And that means that would be when the public has lost confidence and they are making an attempt to regain that confidence. So this is also why I believe, Chris, that where we are right now in the monetary cycle and the shifts that are taking place, this is the most opportune moment that I have ever seen in my lifetime. And I was born in 1954 to get redeemable gold back in the system again. So that's what I'm fighting for.
Okay. Is that part of I saw one of your recent videos that had mentioned something for the Citizens for Sound Money movement. Is that what that's in reference to?
Absolutely, 100%. It's a local movement to get gold and silver legalized state to state. And then we can also go at the federal level, but it's also a global movement because we need to do this together, and everybody is experiencing a massive decline in living standards because they keep devaluing the currency more and more. I mean, it happened in Rome, it happened in France. It happened in what is this? Indonesia, right?
Now,
it happened in Zimbabwe.
Are you talking about states doing legislation making gold and silver legal tender, or are you just talking about people using it?
Well, it's a combination of the two, but what I'm really talking about is the legalization from the states and then them removing taxes from physical gold and silver, because that's actually money. And I think we've got a really good shot. That's growing. Missouri recently approved paying for property taxes and things with gold. Now, is the system perfect? No, it's actually not perfect and not as good as we need it to be, because it would be centralized and digital and all of that. And we have to have the ability that if we don't like what we see our government or central bankers doing, we can say, okay, in exchange for this crypto, this 40% backed, you can keep the rest of it. I'll take my 40% out in gold. Because if it's not redeemable, then it is simply pegged to a manipulated spot contract, and it means absolutely nothing, as we've seen in Zimbabwe with that attempt and their overnight revaluation. We, the public, must take our power back. And this is the opportunity to do it, because once this system is fully in place, then I don't know when that next opportunity is going to be honest with you, another 100 years or so?
Yeah, and probably not in our lifetimes, that's for sure.
Not a second time.
So go ahead.
But I have to say, because, and I'm sorry if I'm pushing us a little bit ahead, but this is the most significant thing that I've seen. I can't say entirely, because I was there for Johnson taking the silver out of the currency, and I was there for Nixon taking us off the gold standard. But when President Trump signed the Genius Act, in my extremely strong opinion, I mean, Chris, there is not even one itty bitty teeny weeny little doubt in my mind, but that he already has changed the monetary system into a digital one. And I believe that it's the stable coins. This isn't the final one. I believe that this is the intro one to take us into that hyperinflation and that big enough crisis to seal the deal on the other side of it. And that's our opportunity, is the crisis that comes from this hyperinflation. But you can't start in 2 seconds. You got to start now.
100% agree. And you should have actually already started. And I want to add this. It's kind of interesting that you have gold and silver being listed in the U.S. Constitution, like federally being constitutional money, but yet you have to go through states to get when states are not supposed to have laws that are against the U.S. Constitution. So anything in the U.S. Constitution should automatically be in a state constitution if you think about it in that respect. And I say the government looks at gold and silver, I believe, as being a commodity.
In many ways, it is a commodity, right?
Right. But if they're saying constitutionally, if it's money, then how can because they tax a commodity, but you can't tax the currency, you can't tax money. So I didn't mean to interrupt you, but go ahead.
No, but I'm glad that you brought that up, because that is a very significant point. Another significant point would be that when the Congress over Christmas, where there weren't very many people there back in 1913, that's when they passed the Federal Reserve Act, which actually was illegal. And why we, the public, allowed this illegal behavior, why we allowed it then, why we are allowing it now. I think I'm understanding it much more than I used to understand it, to go, how can we let that happen? Well, if you don't take back your voice and you don't pay attention, and remember, when they were setting this system up, it's disgusting, but what they actually discussed was the fact that if people had to work harder to maintain a standard of living, they would actually have less time to pay attention to what the government was doing. To me, that's evil and vile and disgusting, but it's absolutely, you think anybody's paying attention? I mean, my own daughters aren't really paying attention.
It's a very, very small percentage of people. And for people that are interested in this topic, one, I'll put my playlist for my interviews with G. Edward Griffin in a playlist so people could check those out. But read his book, The Creature from Jekyll Island. It's dense. You can read the best of at the end, like the summary for each chapter. It's available online. You could buy it at a bookstore, but definitely educate yourself about the formation of the Federal Reserve, because Netflix has this documentary I think it's called Titans or something to that effect, about the late 1800s, starting with the House of Morgan, with JP Morgan's father, beginning with that aspect, but no mention of Aldrich, the Federal Reserve creation, the Jekyll Island stuff, from what I have seen so far. So it's not like we're taught this in school.
No. And we should be, but why aren't we? Because then you'd know the lie, and you'd know, what are you working for? Federal Reserve notes. What are you trying to save for the future? Federal Reserve notes. A note is a debt instrument. And who is not? I mean, look, back in the day, in the 70s and 80s, inflation was a very bad word, but today, well, since 2008, haven't we been told what a good thing inflation is? Oh, yeah, there's lots of people that have to split their food for their family into 4 easy payments every week. And I'm thinking, if you keep growing those easy payments, it ain't going to be easy anymore.
I've seen where people are using like the buy now, pay later for food and stuff to that effect. It's getting rough. That's why I enjoy the conversations that I have with you. And my cat is deciding to act up and knock things off the desk, unfortunately. So we're at the Federal Reserve. We got Trump versus the Federal Reserve. We don't have to get into all the politics of wanting to fire Jerome Powell and what's going on with firing other Fed governors, depending on whether fraud was committed or not. But Trump wants to see a weaker U.S. dollar.
Mm-hmm.
What does that look like for the U.S. economy?
Lots more inflation. That's what that looks like. And so yeah.
So Jerome,
like bottom line.
I'm sorry. Yeah. Well, I'm just say Jerome Powell is like seemingly, in a way, trying to protect the U.S. public from more inflation by keeping the interest rates not low. Or are they both playing a manipulative game here? Are they working together? And is this theatrics before our eyes?
Well, I can't say that for sure, because I do not know if they are working in a coordinated effort. But what we are seeing, which is also very similar with Nixon and his Fed chair Burns, where the central bank has been completely politicized. And Burns definitely cooperated with Nixon, who also wanted a cheaper dollar, and on the outside talking about fighting inflation, but behind covered and behind closed doors. I mean, a devaluation. I'll bet you that. Do you know? Actually, I'm going to ask this question. Do you know that the dollar and gold has been revalued in terms of dollars officially? 1, 2, 3, 4 times. 4, count them 4.
When was the last? Would that have been like in the 1930s, or was it done after that?
After that, 2 were in the 30s to get this whole kickoff, because they couldn't do it all at once. The public would have risen up. The other 2 were in the 70s, and actually it was after 1971. I believe both of them, one took place, I think, at the end of 72 or the very beginning of 73, and then the end of 73. The first one was 10%. The second one was more than 10%. So the currency was actually devalued against gold, right? Because first it was $20.67. Then it went to, I think then it went to 35, then it went to 38, then it went to the 42.22. So maybe, no, there were 4 times. I have to look at the other dates and the ratcheting up. But that's not really gold going up. That's revaluing the currency to reflect more of the printing press. And it hasn't been done since 1973. So lying in our future, you got to look at, once we were on a debt-based system, how much money was created inside of the system. And so therefore, what is the likely ultimate revaluation. Because I can tell you that today, the true fundamental value of an ounce of gold is somewhere between 33,000 and 40,000 an ounce. And silver is somewhere between maybe $900 and $1,200 an ounce. But by the time those revaluations occur, because we got a lot of this to do, it's going to be reflective of it, and I think that we will more than likely see something more akin to what happened in Venezuela, which seems to be, I don't know why, but the easiest one for me to remember off the top of my head. And that was an overnight, there you go, an overnight revaluation of 3,500%.
Yeah, which is ridiculous. I told you before about this video I have, which I'll have linked down below, where I went to a Bitcoin conference in Miami in 2020 or 2021, I think is when it was. And there was a dumpster full of these. And it was a lot. And these are $50 bolivars at the, back in the day. But the entire trash can wasn't even worth any value, that the homeless people there had no interest in it, which is really sad.
Right. So here, I have a question for you. What's the date on that bill?
Let me see. Is it on the bolivars?
It is on the bolivars.
2015? June 23rd, 2015.
Okay.
23rd de Junio Day 2015.
Okay. And this happens to be a 20 bolivar note. And that is dated in 2013. But take a look at this one, which is the $500 million or million bolivar note, and that was minted in 2020.
Yeah,
so is that a reflection of the inflation that was rampant in just a few years?
100%.
A theater near you.
Yeah, and I think, there is a big possibility that is coming to the United States, and I do want to discuss that. Donald Trump is obviously talking about lower interest rates. It looks like Fed Chair Powell has been trying his best to keep things kind of steady because, I don't know, between the tariffs, between the inflation that we are already currently dealing with, didn't seem to be conducive to do this. The market is kind of speculating based off the Jackson Hole speech that Jerome Powell gave that we might see a 25 to 50 basis point drop in the interest rates. And we're seeing the next FOMC meeting take place the 17th and 18th of this month of September, with 18th to 2:30, the results coming out, so everybody knows what's going on. Regardless of whether it happens this time or there's, I think, 3 more meetings, including this one, what happens when the interest rates are lowered?
What does that do? There are a couple things. What that does is it inspires more borrowing, so more debt, because we're going to fix a too much debt problem with even more debt, because that makes sense. And a lot more printing, which is all about devaluation of the currency. And that means that your dollars, and we all know this, we're all experiencing it, your dollars buy you less and less and less. And what that really, really means, Chris, we've been bouncing off the old-time lows in terms of consumer confidence. When those prices go up more quickly, that inflation is more rapid, that erodes more confidence. I don't know when we're going to break through on that bottom support level yet, but rapid inflation would do that. And the beauty part of looking at technicals is they work for everything the same way. So I believe that, and as you know, because we've spoken about it before, that the hyperinflation has already begun. It's just not publicly visible yet. But with that loss of confidence, and that's what we're seeing on a global basis in the government bond market, that confidence in the system, in those that are in power, in all of the debt that they're raising, that is eroding really rapidly. And if we lose that, there's your visible hyperinflation.
I mean, I think it's getting to be visible, but it's obviously I don't know if I would define it as hyperinflation, but we are seeing prices of things going up monthly, some things going up by every 2 to 3 months. I've noticed that everything from electricity to my groceries to even my cigarettes, they just keep raising the prices. So if they're doing this every month or two, that is a non-extreme form of hyperinflation.
Yeah. It's like if I went into your house every day for 30 years and I took one button every single day, you might be a little inconvenienced, but you're probably not going to realize that I've been stealing your buttons. If, however, I go into your house tonight and I take 97% of all the buttons in your closet, when you go to get dressed tomorrow morning, you're probably going to notice it. And that, my friend, is the difference between inflation and hyperinflation. And it is really the Federal Reserve or any central bank's key job is to regulate the speed and the rate of that inflation so that it maintains your confidence, which then supports their second mandate of price stability. Now, what is price stability? You and I mean, I would think hearing that gallon of milk just stays the same price over time, just stays the same price. But that is not a central banker's definition of price stability. In their definition, it is the consumer, the public, maintaining their current standard of living and taking on more debt to do it and not requiring more money for their employment, right? That is price stability. You keep doing it, you just keep getting deeper and deeper and deeper into debt. You don't change your behavior.
That makes sense. It makes sense.
At least it's for you. You know,
well, and I'm hoping it does for other people. And that's why I know the answers to some of these things, but I don't necessarily know the extremes of where they can go. And that's why I wanted to ask you these questions, because I think that a lot of people are thinking, I'd like to think that a lot of people are thinking what I'm thinking, because there's been so much talk about this, like what is going to happen when they lower interest rates, because they just keep talking about we need lower interest rates, but they're not talking about what would happen as a result of. And that's why I think it's important to bring it up. Noticed.
Just expand that just for one more little second.
Yeah.
You know, the Federal Reserve Education Department, the FRED, FRED, if you were to pull that up, you want to take a look at financial conditions. And anything below the zero means very loose financial conditions. Anything above the zero line means tight conditions. So the Federal Reserve is keeping the interest rate up because, and they're allowing their balance sheet to run off. In other words, they're letting the treasuries that they're holding mature and they're not replacing them. And in their mind, somehow, that is reducing the easy money policy. But it's not really, because when you look at that chart from the Federal Reserve, this is not mine. Yeah, you want to put in financial conditions. What you're going to see is that the conditions are as loose as they have ever been. So it really is like pushing on a string to get stimulation, right? Can you see that? I can't, it's too small for me to read.
Let me try to make this thing full screen real quick.
Well,
I don't know if you can see
okay,
that.
Changes in financial. Yeah. Let's look at the first one.
The very first one?
Yeah. Let's see if that's the one I'm thinking. If you scroll,
okay.
Look at it. There you go. That's financial conditions. So, oops. There you go. So that darker black line that's in the middle of the screen, you can see on the left-hand axis, it's at zero, right?
Yeah.
So anything below that, it's easy financial conditions. Where are we on this chart? We are below that line. So if they lower the inch, so this is why I got to
0.41 right now, or
right,
actually, excuse me, 0.56 maybe.
Yeah, it doesn't matter. Anything below that line is very loose financial conditions. And you can see that in those gray bars, which are classified as official recessions, that credit gets very tight. The banks stop lending. But look at it. And all of that money that's been pushed into the system, that's still sloshing around in the system. It doesn't get used up. It just moves from one place to another place to another place. So if they lower the interest rates, that means that financial conditions will be even looser. And we are not too far from the loosest they've ever been. I can't see the dates on the bottom. But I think that's probably around 90s or 2000s.
This is going from 1971 to 2025.
Right. See where it's been at the absolute bottom, which it hit twice before? There.
That would have been 1993.
Okay.
And so then also it looks like really, really close to it though, in 77.
Exactly. And that first part is when we went off the gold standard, and they created a ton of new money because they no longer had the fiscal responsibility of gold being forced on them. And they weren't really doing that. They weren't really adhering to the rules before that. But so looking at this graph, what you need to understand, what everybody needs to understand, is that there's already a ton of money sloshing around. So every time you hear a central banker lament that, that it's hard out there, or even President Trump saying how hard it is to get credit, well, that is not true according to the Federal Reserve. But because conditions are already so loose, if they drop the interest rates lower, that is going to ratchet up that inflation that is proving to be so sticky, which is what you just saw, why it's proving to be so sticky. And they're going to lose control because they already pretty much have.
Well, that's why I think we're seeing the Genius Act, the stable coins, what's going on with that, because that's kind of allowing them to kick the can down the road just a little bit longer. Also, something I was thinking about while you were talking is that the M2 money supply, from what I understand, has just been increasing like insanely.
Look at it. And the M2 is not the broadest base of money. That's the M3, which they took away from us in 2006, because we don't really need to know how much money they're creating. But if you want to know, then you would have to do some digging to see all of the debt that has been created in the U.S. if you want to break it out. And in order to really know. I do it on a global basis because this is a global issue. And according to the IFF, which is a government agency, regulated agency, they say that there's $313 trillion worth of global debt. I can't sit here and say that that's absolutely accurate, nor does it actually reflect all of those derivative bets against all of that debt. But if you want to know where we are in the cycle, we are in extraordinarily loose credit cycle. And if they make credit even cheaper, well, then you're going to get a whole lot more devaluation. So it's that coupled with consumer sentiment that we really need to be paying attention to, because rapid inflation will erode that confidence. That's why they like it at that 2%, because they're the Fed and the government, they're getting all your buttons, but they're just doing it slowly.
Right. Yeah, you're not noticing it like in the first example that you gave.
Right.
In regards to the Federal Reserve, the last thing I wanted to ask you before we talk about stablecoins and the Genius Act is the repo markets. I've been noticing that the facility is apparently low and it's largely drained. I guess this is like a 21 low, but I also remember the end of 2019 where there had to be that emergency injection because of the failure of the repo markets. And it kind of seems like we may be up, on the cusp of that. And I know not everything always repeats, but it rhymes. So are we about to get the next line of the rap song that rhymes with the first line, which was 2019, the system was pretty much done again? Like all the life support that you said that you've talked about over the years, that the entire TradFi financial system, banking system is on life support, and it's basically a zombie. It was 2019 was the end of it, and then we had this convenient global pandemic, which seemed to not necessarily allow for the 2019 repo market crisis to do what it was intended to do.
Okay, first of all, I don't know what the intention was.
Well, I mean that it would have been the end of the life support.
Well, it did, and they're rushing in, and whether we see it or we don't see it, because even though I like those Fred charts, I think it's more honest there. I guarantee you we do not know everything behind the curtain. But I think in the case that you're discussing and in the repo markets, that's actually what funds the liquidity in the money market accounts that people have been taught to think of as being just like a savings account and so safe and secure. But they continuously change the rules so that, and you don't read it. I mean, who reads that big, thick, teeny weeny print when you're putting money into a money market to get a little bit of pickup in interest? We could absolutely see a repeat of that. It would be much grander. And if we're talking, can we talk about the stable coins now?
Yeah, bring him. Yeah, because I know that I am limited with time with you. And at this point, I got about 12 minutes.
I know. But you know what? Another chart to pull up, since you're in the Fred anyway, would be to pull up the corporate profits. Because when you think that the Federal Reserve and the government is working on the little people's behalf, the truth of the matter is that it's the corporations that are too big to fail. Now, if we come together in community and we demand redeemable sound money back in our system again, then that changes everything. Maybe. I can't guarantee it. I don't even know what I'm really doing, but I'm talking about it. Corporate profits, put that in there. It's mind-blowing. It is the corporations, and go ahead, pull the first one. Look at those corporate profits.
They just keep going up.
Yes, they do. Except if you narrow it in, and so you can see what's happening at this moment. Up at the top, it says 1 year. Yeah, go up. Move your cursor straight up. Yeah. See what's happening here? So it is about protecting corporate profits. That's what that inflation and all of that money is about. And, it's ridiculous. Did the corporations take advantage of the tariffs? 100%. Did they take advantage of what happened in 2020? We had already started. The Federal Reserve had already reversed and been buying a lot of government debt to bail out those money market funds. Then 2020 was an absolutely perfect way to justify a ton of this, more than ever before. But because all of the money that they've been printing since 2008 is still sloshing around the system, that's what I said. It is pushing on a string. It's really not helping the economy, but it is pushing up corporate profits.
Yeah, no, I can definitely see that. And I think most people have realized that when, we've seen the economy kind of locked down and who profited from that, and how it's affected mom and pop kind of stores, businesses, and how it's affected the middle class.
Right. So now let's talk about the Genius Act, because quite honestly, any corporation, as long as they meet whatever requirements, can actually issue stable coins. And so what they're attempting to do, meaning President Trump, is to create a new artificial market for dollars and dollar denominated debt because they've got to issue, it's probably a lot more than this, but this is stated, about 3.8, let's just say 4 trillion more. Now they raised the debt ceiling to accommodate that, right? But where is that money going to come from since our two largest buyers, China and Japan, have been whittling away their holdings and not buying as much since 2013? This is not new news, right? And so all of those longer term, more stable holders, they're not in these markets on the level that they need to be. But what are we going to do if we don't have any buyers of our debt? So the stable coins have, again, just like they did back in 13, just like they did in 1970, after 1971. So the stable coins actually enable corporations to create an unlimited amount of new money, whether or not that is going to be enough to offset the loss of the traditional borrowers, right? The other sovereigns, other governments in the world. I don't know. That race is still, we'll see what happens with it. But you go into Amazon and you shop there, and now all of a sudden there's all these perks just to use the Amazon stable coins. You can't use them anywhere else but in Amazon, but you build this whole infrastructure to support that. And that means, and you remember, because we've had this conversation, what was going to justify new money creation? And I said the two things that I've heard them talk about has been debt. So they've got to hyperinflate the debt that's not payable away, but they're still going to use that. And purchases. And now I have my answer. And it is both. Purchases that will lead to the ability to have a buyer for more debt. Though I would bet you anything that the Fed is going to have to intercede and buy up a whole bunch of government debt anyway. But you've got to understand that Amazon can create a stable coin. You know, Walmart can, Kmart can, Macy's can, JP Morgan can, Visa can, the Bank of England can, and it doesn't have to be backed by dollars. They can do a British pound stable coin, a Hong Kong dollar stable coin. So all of this fragmented new money that, I mean, if it's issued by a corporation in the US or maybe a third world corporation like we've seen them do in Africa, there's going to be so much new money created because it's all based upon purchases. And the easier, and listen to how they're touting it, how much easier and faster and cheaper it is to create this new money. So can you do me a favor and go back into Fred and put in purchasing power of the consumer dollar? Because the easier and cheaper it is and the faster it is to create new money, the more new money will be created and the less money out there will have, less purchasing power they will have.
You said purchasing
power
of the
consumer dollar.
Consumer dollar.
Yep.
Okay.
Yep.
Get that on screen and then we'll do the search.
If I can only ever work with just one chart, this would be the chart that I would use.
Okay, so let me go back to the search and pull up probably the first one.
Here we go. Yep, probably the first one.
Urban consumers.
Yep. Now, if you scroll down, you can see that. But if you do you have a way to enlarge it? Because what is the number on the bottom of the axis that we are very close to, but on that left side? Go all the way down. If you can make that bigger, that so people could see it.
Yeah, this is as big as I can. Hold on, let me go back to. I'm navigating between two different tabs to do this part. Yeah, okay. So now going back to the Fred website, this will put us right now at 3.1.
Right. It's actually 0.031. So it's officially, we have 3 cents out of that original dollar. But can you go all the way up to where this chart starts and then go right down that left-hand axis? Right. Okay. Here. All the way down. What's that number on the bottom of that axis?
I'm not. You're talking about right here.
No, I don't forget the chart for a second. Just
Okay.
the numbers. You see where it starts and it says 1,000.
Right. It's 0 to 1100. Let me see if it goes higher.
Exactly. It's a big fat zero.
Yeah, 0 is the lowest number that we're and we're very, very, very close to it.
That is my point. And so what the Federal Reserve is actually telling you with their chart.
Look how closely this almost matches up.
Exactly. Is the true value of $1 of any of this garbage government-based money is zero. And you know how else you know that? You know that in the cost to create a dollar. If you're printing it, it's 3.4 cents. On the $100, probably because it has that strip in it, it's 9.7 cents or something like that. Now, you and I have to work 100 times harder for that $100 bill. But the difference between the cost to create it and what they sell it to you for, right? So, and if it's digital, it's even less than 9.7 cents, right? That difference is called seigniorage. That is how the Federal Reserve generates its income. So the more money that they print and create, the more money that they have to work with. And here's the scary part about that. For the last now 4.5 years, the Federal Reserve has been losing money because whatever they don't use up goes to the Treasury. They haven't been able to give the Treasury any more of that. So you have to understand the Federal Reserve is telling you the true value of this garbage is zero, just like this $10 trillion Zimbabwe note. It has absolutely no value at all. Now, when we go into this new system and it's even cheaper and it's even faster and it's even easier to create this new money. I mean, can't you see the handwriting on the wall? It's over, babes. It's over.
Well, I always appreciate you sharing your wisdom. I mean, again, I just think it's a culmination of everything that we've been talking about since that very first interview we've done together. I do want to be respectful of your time because it looks like we're at roughly a 2-minute hard stop. So I'm going to really quickly pull up one screen, do a screen share that's going to show the playlist with all of your previous appearances. These will be linked down below in the video description. Lynette Zang's YouTube channel, which you can find at the Lynette Zang. You can also find her on X at the Lynette Zang as well. And here we are at her website, LynetteZang.com, home of Zang Enterprises. I want to go ahead and let you close out and explain to everybody what you do over at Zang Enterprises and any final thoughts you might have for today.
Well, my final thought is stop procrastinating if you've been procrastinating and make sure that you are properly diversified. So if you want to do, or you have no choice but to do stocks, bonds, and cryptos and all of that, that's fine. But a properly diversified portfolio has hard assets as well and sound money in it. And at Zang Enterprises, I've been studying currency life cycles since 1987, and we have a sound money strategy that's based upon your goals and repeatable patterns. So what we always try and do is meet you where you are. There are no such things as stupid questions. We will take all the time you need to understand what's going on and get you to where you want to go. Is really quite an amazing tool. I don't know anybody else that has that. It includes what you're positioning into, and it also includes an exit strategy. What a concept.
What a concept. That's why I appreciate what you do. Normally, we do this at the beginning of the conversation so that we can, because I want everybody to know that you're not just a talking head, that you're actually, there's a purpose behind what you're doing. And I have always appreciated, and I definitely encourage people, you can schedule a free consultation at the website at LynetteZang.com and check out all those previous appearances. Before we wrap things up, you got any final thoughts, anything you want to add to today's conversation before we do call it a day?
You know, I really hope that people really understand that when they change the money for the system, this is never in your best interest. And it is critically important that you become your own central banker and have assets that are truly outside of the system, private, and especially run zero counterparty risk. This is not me saying that. This is the Bank for International Settlements, who's the central banker's central bank. And who in the world knows more about money and what's happening in the system than central bankers, whose job is to regulate the rate and speed of that loss of purchasing power. They're losing control, and that's why they're buying more gold than they ever have since tracking began back in the 50s.
Well, Lynette, as always, I appreciate your time. I value everything that you have to share. I will be in touch. I told you I will talk with you about, now that it's getting ready to become fall and winter, trying to coordinate a trip out to Arizona. So I will be in touch with you about that. This interview will be out in another day or two. So I'll also let you and your staff and your team know so that we can get this out to everybody so they can check it out. Thank you again for your time, Lynette.
Anytime, Chris. Anytime at all. Thanks for having me.
Thank you for taking the time to watch today's interview with Lynette Zang. Time is our most valuable asset, and I appreciate you giving me yours. I'm not going to take much more. I just encourage you to make sure you are subscribed to the channel if you're not already. If you are subscribed, make sure you're still subscribed. If you enjoyed this video, give a thumbs up, hit that notification bell so you can be notified for when new videos come out. And as always, I do encourage you to be a blessing to others, treat people how you want to be treated, be the glitch you want to see in this matrix, be the change you want to see in this world. And until next time, practice change.